Can you tell me how many of you truly anticipated this turn of events? AMC has been hit with a fresh class action lawsuit in a surprising development. Late last night, Reuters reported that a new class action lawsuit has been filed on behalf of AMC's preferred equity shareholders, challenging the recently approved conversion plan. This comes shortly after the Chancellor's final decision on the matter. So, what's the story behind all of this? Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. Once news of the Chancellor's final decision broke, people began crunching numbers, especially now that the dates for the upcoming reverse stock split have been set. Tools like a specialized calculator have emerged, allowing individuals to input their AMC holdings and predict their share count after the conversion. Some investors, however, are feeling uneasy about the calculations and the potential outcomes. A participant in this new lawsuit argues that AMC is obligated to provide the same number of shares to APE holders as they are offering to common stockholders and shareholders. This addresses a key concern raised by the Chancellor, who initially highlighted the gap in the settlement that allowed individual investors to potentially pursue AMC through individual lawsuits. This comparison between what different investors might receive is at the heart of this complaint. The APE investor argues that the settlement negatively impacts the ownership interest of preferred shareholders and violates the governing certificate of AMC's preferred equity stock. This lawsuit adds more legal complexity to an already turbulent situation for the company. Objections to class action settlements by shareholders are rare occurrences, making this situation particularly noteworthy. It's worth noting how lengthy this process has been, and the fact that AMC has already received numerous inquiries from investors questioning the company's financial health adds to the intrigue. Now, legal minds within the AMC community are expected to dissect the potential implications of this development. If successful, this lawsuit could bring about significant changes or delays in the conversion and reverse stock split plans. While it's unlikely that Adam Marone will propose another settlement, many believe that he should consider offering more shares to appease concerned investors. The current calculations indicate that many shareholders stand to lose a substantial number of shares, potentially affecting their overall holdings and the perceived value of their investments. The uncertainty surrounding the stock's future performance post-reverse stock split only amplifies these concerns. However, amidst this uncertainty, a notable statistic has emerged. Over 40% of the company's float is currently on loan, as reported by Ortex. This startling figure prompts questions about how this percentage has been reached. One plausible explanation is that institutional investors and individual shareholders have contributed to this loan percentage, potentially by lending shares from their own portfolios. This intriguing statistic raises eyebrows and highlights the complexity of AMC's current situation. Surprisingly, Wall Street's sentiment towards AMC is evolving. While traditionally bullish on the stock's fundamentals, they now emphasize their bullish outlook on the company's financial stability and growth prospects. Wall Street's optimism is grounded in the belief that AMC can generate around $2 billion in equity, which can be used to pay off debts, clear financial obligations, and bolster its financial standing. This, in turn, could lead to better conditions for debt holders, with older debts potentially aligning in value with newer ones. Wall Street analysts foresee strong performance for AMC in the coming quarters, with expectations of revenue levels surpassing pre-pandemic figures. They believe that the equity's fundamental value will rise, proving profitable for both debt holders and the company. The prospect of issuing up to $2 billion in equity is seen as a positive step, even hinting at the possibility of paying off debts solely through equity appreciation should share prices continue to rise. However, this rosy outlook fails to address the concerns surrounding potential dilution and price decreases following the conversion and equity issuance. Optimism is essential, and it's crucial to analyze the numbers closely. The complex landscape is further complicated by ongoing class action lawsuits, which undoubtedly present challenges for AMC's equity issuance plans. With the first phase of these changes set for August 24, the situation remains dynamic and worth monitoring closely. This newfound optimism from Wall Street holds significance, especially since it comes without banking on a short squeeze. While the fundamentals take center stage, it's important to consider the impact on those invested in AMC for its potential squeeze. The dichotomy between these two perspectives adds depth to the ongoing AMC saga. In conclusion, AMC's recent developments have taken many by surprise, and the emergence of a new class action lawsuit challenges the conversion plan approved following the Chancellor's decision. The uncertain outcomes of these legal battles, coupled with the looming reverse stock split, have left investors uneasy. Meanwhile, Wall Street's unexpected bullish sentiment is rooted in AMC's potential to raise significant equity and improve its financial standing. As these narratives unfold, the AMC community and financial analysts alike are closely watching to see how this intricate situation develops. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.